Greetings, members, one and all of the Salivation Nation. What can prevent silver from getting to $25 by Thanksgiving, or knock it down from $25 if it reaches there by Thanksgiving? That's what we're going to explore in this article. Not to be a Debbie Downer, but you'll see what I mean. Let's explore. Yeah, so, a lot of people are making some bullish predictions. And, we are sort of emboldened, for sure, seeing the movement of silver that we have been experiencing quite here recently. So it's only makes sense that people are thinking, well, okay, we're seeing it move up, and day by day, then more than likely we could possibly potentially see it go even higher. And there's some credibility to that, and it could happen. But I'm going to be a little bit of a counterweight to that as we explore this article from Kitco News that was sent to me by Silver Honda, who drives a blue Honda. Let's find out exactly what they're saying here and see what could possibly get silver to possibly pull back a bit. This is from Kitco News. Silver is accelerating its move higher as it plays catch-up with gold to increase trade uncertainty, Brexit, and global growth worries. Factors that are all pushing precious metals higher, according to analysts. And I'm going to stop right there because, I've been talking about those, the factors that are causing some concerns. It's really not even necessarily about the economy. Even though there's obviously fear that we could go into another recession because of trade, the actual economy itself is doing very well. We're overdue for just for natural reasons. We're overdue for a recession. We haven't had one in over 10 years now, so we're kind of overdue for one. And I think that is something that could happen basically independent of politics, just to consider there. But nonetheless, the dollar is strong. There's a growth in the United States, and make no mistake, the economy here is growing, and it's doing well compared to other places around the world, even first world nations. At the time of the writing, December COMEX silver was up nearly 5% on the day and trading at $19.27 an ounce. It's actually higher than that now. We'll explore those prices in a moment. Also, December COMEX gold was last at $15.54.30, up 1.63% on the day. The move in silver is driven by gold, said analysts, as they reminded investors that the metal is usually much more volatile than gold. That's true. But there's another caveat there, too. Silver is seen more as a duality metal. In other words, there's a duality nature to it. It is seen much more as a versatile industrial metal. See, in the past, it was seen as an industrial metal, but it's basically used in fewer and fewer applications, in photography and the like, mirrors and things that basically really took advantage of its properties as being reflective, conductive, and the like. But now it's even more widespread in its usage in technology. Silver's catching up here. It's getting a bid from gold. The U.S. dollar fell a bit. Rates again dropped significantly, and equity markets went into flux. Essentially, what is meant for us is that we will get our $19 to $20 silver target quicker, TD Securities head of global strategy Bart Melek told Kitco News. You would never expect silver to outperform gold, given the fact that it has double the volatility of gold, which means that it could very much fall just as quickly as it rises. And that's the thing that people have to keep in mind here. The gold to silver ratio moved from the July's disappointing level of 93 to 81 on Tuesday, and Malik said he wouldn't be surprised to see that number fall below 79. It actually did briefly. From a historical perspective, silver always follows gold, with the metal still remaining cheap even at these levels. We had a significant period of time where gold was not doing great and silver did even worse. We've hit a peak underperformance in July when the ratio was at 93 to 3. Now it is very much catch up, added Malik. And keep in mind, I remember that wasn't that long ago, and I am surprised even to this point that it is catching up as much as it has because it sees an industrial metal. But I think people are seeing opportunity, and it's a speculative grab, I think, in the electronic markets and the paper markets for silver. And they're kind of discounting this industrial usage of silver, not only seeing it as a duality metal, they're seeing it as a hedge based off of past performance. Well, as you've heard me say before, and many other people say, a disclaimer, past performance doesn't necessarily predict future results. Tuesday's impressive move up was largely driven by weak manufacturing numbers out of the U.S., which revealed that the sector has contracted for the first time since 2016, said Ron O'Connell, head of market analyst for EMEA and Asia regions and TLFCS Stone. Now that's an economic indicator. Obviously, there's other economic indicators too that we've just heard being discussed not only here but in other places about the bond yield curve and the fear there. But in terms of actually on the ground, the economy is largely doing well. But little things like this are going to spook the markets for sure. The data show that the ISM Manufacturing Index came in at 49.1% last month, missing market expectations of 51.1%. O'Connor described silver's price action as a typical move and added that silver is usually more extreme than gold. And that is true, for sure. But I do think it's a little bit different this time because of the fact that they're seeing it more as a speculative play. Because I think there is a shifting of this time in view of silver as a more volatile or a versatile metal in terms of manufacturing, in industry, in electronics, technology, in the biomedical field. However, we have seen a time where silver's languished for a while, and during that time, there wasn't quite as many applications for silver. And I think the fact that there are more applications for silver now and are more dependent on the economy, that could have a negative effect on silver, potentially. We'll explore that in a moment. But the article asks the question as, what is next for silver? Gold has further room to grow, which means that silver is also heading higher, according to RJO Futures Senior Market Strategist Philip Streibel. If gold can take out 1550 to 60, then I'm definitely heading to 1600, Streibel noted. The gold-silver ratio has taken a dramatic turn lower. A more normalized level for the gold-silver ratio is in the 60s, and that's right. That is more of a normal level that we've seen. But will that normal ever be achieved? I'm here to tell you that it still may not. Because I still think there's something to this dual nature of silver that really, not only the markets, the commodity markets, but even those of us in this space of precious metals see that as well. It's not that we're discounting it as dormant money and as a hedge, but I think we're seeing a new level, and that it not necessarily can be as tied closely to gold at that normalized level of 60 to 1. I believe that if we could see 70 to 1, that we should be very happy, and it may float back up again. Who knows? But then again, if there is a big bull market in the physical realm and it's sustainable, then we may return to it. But I think that's going to be something that needs to be tested in time. Then it goes on to say that silver can easily achieve $25 by Thanksgiving. I agree. You look at this thing, people are coming in. The FOMO aspect of it, fear of missing out, and that is also in the electronic markets and in the physical markets. The one thing that could disappoint the precious metals market is the Federal Reserve, which is scheduled to announce its rate decision on September the 18th, the strategist added. The trade talks are going nowhere, and it seems that the UK Brexit negotiations are falling apart, Streibel said. Malik is not ruling out higher gold and silver prices either, stating that this gold target is 15 $85. Not sure if silver could breach $20, but depending on how much momentum there is in the market, it could very well happen. Ultimately, silver is positioned quite well for a better time. Traders should continue to keep a close eye on the U.S. and global economies, as well as the U.S. dollar and interest rate environment, the TD strategist said. And that's just it. Let's take a look now at real-time gold and silver prices and see what we've got going on here. We're seeing movement again. The winner today is platinum. It's continuing to make strides much closer now to the $1,000 level. But, when I talk about platinum, there's not a whole lot of interest in platinum in the precious metals market. It's all gold and silver. But I do think it's something that is something to be considered. I know Losing Louis is getting into the electronic platinum, which makes sense because he's not sure if he could flip the physical and what is getting back on it. That's an understandable point. But nonetheless, there is interest in that space. And palladium is now up above, noticeably above gold. And gold is the weakest mover today. Whereas silver is up higher and percentage-wise over 1% higher now. Silver is at $19.67. It may not take a while too long before it gets to the $20 level. Now, by Thanksgiving, will it hit $25? It's quite possible. But if it does climb that much in that short amount of time, then I believe to be cautious and be very careful, because it's probably it's going to possibly could come crashing right back down. And when I say crashing, I don't like to use that term because I don't think precious metal prices really can crash unless they lose half their value in one day. But that doesn't happen because people see what these metals are, and it takes quite a while for it to go back down to where it was. I mean, obviously, you take a look at where the anomaly of silver being at almost $50 an ounce in 2011. It's obviously less than half than that now, and much less than half than that 6 months ago. But that doesn't mean that it's happened in one day. It was a slow movement back down to that point. But nonetheless, a quick move upward that we're seeing here in the markets lately is something that may not be sustainable. I think there's going to be a couple of tests that are going to have to be made, and one of those tests is going to have to be in the physical markets and seeing that demand pick up. We may not really know that for months. We can get a lot of anecdotal evidence, but until the Silver Institute releases their report, especially this late in the year when it's happening, the beginning kind of the second half of 2019 here, how soon we will find that out, I don't know. I think that's going to be the true test to see if it's in the physical, because in electronic markets, this stuff can be dumped very quickly. People get scared and it starts to go back down, and we can see those ratios increase again. It's less likely to happen with gold. That's part of the volatility with silver and gold, but couple that with the previous point in the 90s and early 2000s when silver languished for a while. We live in an instant information age here now, and that's going to have a huge effect on this stuff. So be cautious out there. Be excited. There's nothing wrong with that, I believe, and it is exciting to see these prices move up, especially when we're getting close to $20 again, because it has been a while since we've seen them. But let's give it some time to really soak in. The marination of these prices, I think, is something to be considered, and we should wait for. Just like some good old marinated chicken. Let this stuff sit for a while. It tastes delicious, but you got to give it time to soak in. A multitude of marination to you all for watching this video. Post your comments below, and then I'll extend a multitude of gratitude to you all for watching this video. And encourage you to please rate, share, comment, and subscribe.